And we're live. Hi, everyone, and welcome to Thursday Night Real Talk. I am Diane Needle, joined by Bruce Needle, and our guest tonight is Jason Evans from Guaranteed Rate. And
Hey, Jason.
Thanks, guys. Pumped to be
How
on here
are
with
you? His office is much nicer than ours, huh?
Absolutely.
It's looking good.
Thank you.
So tonight we promoted this show. Tonight we're going to talk about mortgages. Jason, you want to talk a little bit about what you do, Jason, your experience and Guaranteed Rate for a minute.
Yeah, so I've been a mortgage loan officer since 2005. It's been my only job since college, and I've been helping a lot of people buy homes. And also
For 1 year?
Yeah, what's that?
For 1 year?
Yeah, 1 year. Yep.
Yeah.
And so just been helping a lot of people out, trying to be aggressive and things we can do to help them get their offers accepted because it's so competitive for buyers right now. And this year we've been helping a lot of people save money just because the rates have been so low. So we've been helping them refinance to get lower payments as well. So
Awesome. So I think what happens when we talk about mortgages, there's a few things on everybody's mind. I know all of us here, we eat and breathe this every day. But I would imagine if you're sitting at home watching this, you want to know, are we in a bubble, right? Prices are crazy. And what are mortgage rates going to do? Could they get any lower? Are they just going to start exploding and going up? So that's a little bit about what we're going to cover today here on Real Talk. So the first thing I think we should talk about is where are mortgage rates going? And Jason, we'll let you talk about that.
yeah, so rates have been super low for the last 18 months, really. You can see from this chart here, they really bottomed out like last summer 2020. They started to go up and started this year, then they came right back down. So we've been in a very low rate environment in general. One thing that's going on right now is the Fed recently said they're going to start pulling back on some of the support they've been giving to the bond market, which is the reason rates have been so low. And you see that recent uptick on the blue line there. That happened right when the Fed made that announcement. So they have not even pulled back on the billions of dollars they're spending in the bond market yet, but just the fact that they're going to be has caused rates to go up. And kind of to go with that, you see the orange part of the graph there. It shows the consensus on where rates are going in the next year. So we're definitely expecting now that the Fed's pulling back, rates are going to be on the upswing, and we've seen that starting already a little bit the last couple of weeks.
Right. So our next slide, when we talk about mortgage rate projections, everyone has a different opinion. So, but it does look like the consensus, all the experts from Freddie Mae, Freddie Mac, the Mortgage Bankers Association, the National Association of Realtors, they seem to all be in similar consensus, and ultimately the rates will remain, it looks like, under 4 throughout 2022, Jason?
Yeah, that's pretty common that people think around 3.5 is where we'll end up by this time next year, which if you look back over the last 10 years is a super low rate. Like we're lucky to have rates that low. You know, they've artificially been lower because of the Fed the last 18 months, and a rate of 3.5 is still a great rate though.
It's incredible. What do you say to buyers? You know, we're with customers, buyers and sellers all the time. You're getting calls for people getting pre-approved, and I would imagine you get similar questions that we get, which is, you know, am I overpaying? Is the bottom going to crash out of the market? You know, am I going to regret this decision? And et cetera, et cetera. What do you say to your borrowers?
Yeah, a lot of people are worried about that. Like, '08 wasn't that long ago. People remember that huge crash we had back then. And the difference this time around is there's still a huge demand for homes. You guys see it every day, just like we do. So many people are making offers and losing out because there's multiple people bidding on the same home.
Yeah.
So as long as that demand's there, the prices aren't going to crash. They're going to keep on going up because it's a supply and demand equation. And there's a lot more people that want homes than are selling them right now. And that's going to keep the pressure on prices to keep on going up. So in general, if you think about it, we know pretty sure that homes will be more expensive a year from now than they are today. And you can see from this graph and the chart that we're talking about, the expectation is rates will be higher as well. So you're going to be paying more interest and you're going to be paying more for the price of the home a year from now than you are today. So, we don't see any major changes to affect that at this point.
Yeah. I remember, I still run into buyers talking about the bubble, and all of that. And I'm always telling them about the subprime market and how different it was in 2008 when the market did crash. And a lot of that, unfortunately, it did have to do with the lending industry and leniency and all of that. Talk to us about, I know that we are back, for a while, I think we were seeing, the climate was probably 20% down, 20% down. But I think the programs you have now, we are seeing, obviously there are VA loans with 100% financing, but I believe you also have programs that are with 5% down, 10% down. Um,
Right.
are you
Yeah.
seeing more of those now, Jason?
Yeah, they've been available for a while. So, like, if you're a first-time home buyer, there's 3% down options that are readily available. Even if you've owned a home in the past, you can get a new home if it's going to be your primary residence with just 5% down. And then once you get up to some of the higher price points, like in this area, up 800,000 plus, then you're talking about jumbo loans that require 10% down. But even that, a lot of people would require 20% down on the jumbos. We can do it with just 10. So, the higher the price point in general, the more you're going to have to come up with on your own.
All right. And we wanted to, in this competitive market, this is a funny cartoon that we saw about getting pre-approved, and everyone wants to do all of these things, but the advice is don't do it before you talk to Jason.
Exactly.
Right? Don't switch jobs, don't switch careers, don't prepay for that vacation, don't go buy that sexy car just because you found the house you want to buy. Don't do those things first. Talk to
Exactly.
Jason
That's
first.
what we do. We pound that into our buyers' heads. It's to the point where all people calling me, asking me if they can sign up for Comcast for their new home. They're so scared. So, which is what we want. We don't want them doing anything to mess up their closing. So
Absolutely,
yeah.
because I think too, even when it's not even so much about getting pre-approved or getting the approval, it's also getting to the closing table, right? Because if I go buy that sexy car and pay for that vacation and you pull my credit before closing, chances are my ratios have changed, right?
Right, yeah, because we get an update if Mercedes checks your credit a day before closing. We get an alert that just happened, so we'll know what's going on. And yeah, if your ratios are tight, that could be a problem. So
Yeah.
wait until you have the keys in your hand and you've moved into the home, then you can go buy that car.
Well, it's all about getting to the closing table, and it's one of the reasons why I recommend people talk to Jason. That's why I always refer clients to Jason. I get no money out of it. I get satisfaction knowing that we're getting to the closing table. I was just in a situation recently where I was in a competitive situation. Jason was the loan officer for my clients. The competitor went with an online bank, and the listing agent, even though my my clients had a lower than 20% down payment, the listing agent knew that the trying to rely on an online bank was going to be very, very difficult because there's nobody that you're consistently talking to. There's nobody that's monitoring the way you are. It makes a big difference.
100%. And how about Jason, you have a program that I think, Bruce, didn't you utilize this in that competitive situation, the Approval Express that Jason offers?
Whenever I can, I highly recommend it. It basically does underwriting up front, right, Jason, or before?
Yeah. So we're basically what we're doing is, everybody's making offers with pre-approval letters, which at the end of the day, the loan officer, if they're not good, could screw that up, and your loan could end up being denied even though you're pre-approved. So to give the agents more confidence, the sellers more confidence with the buyer, we have our underwriter officially underwrite the entire file, review all documents needed from the buyer, and give their stamp of approval. So now, as an agent, when you're presenting the offer, you can really highlight the fact that, hey, these guys aren't just pre-approved. They've already been approved for their loan. They have their loan commitment. They just need to find a house to buy. So now there's no fear of them getting denied, 3 weeks after their offer is accepted and you having to go back on the market and relist your home for sale. So it just gives the sellers that like really high level of confidence with our clients and your clients, so they know if they choose their offer, we're going to get it done and it's going to close on time. So this is something we're offering. We're really recommending all of our clients do, because in this competitive market, you need every edge you can get. And it's stuff you're going to be doing anyways. You know, you're going to have to supply all your paperwork once you find the home. So why not just do it up front and give yourself a better chance at getting the house you want? You know, there's no cost to the buyer. It's just something we're doing to try to help them get their house.
And typically, how long does that approval process take?
It's not long. Like once we have all the docs, it's usually the next day you'll be fully approved. So like we're right on top of it, and it's a case where you kind of need to do it in advance. You can't see a home on Sunday and get fully underwritten that day.
Right.
You can offer that night, so you need to prepare a little bit for it, but well worth it for sure.
But if you know you're out looking for a home, hey, my wife and I, my partner and I have decided we're going to go look for a house. I'm calling Jason. I want to know what my buying power is. We have that discussion. I make this, have credits this, we make that. Are you going out now? Have you found and identified the home? No, we're not ready yet. We just want to get our ducks in a row. That's the time to do that, because
Exactly.
it's the same process. I agree with you. If somebody calls and says, I just saw the house I want, I need a pre-approval, I haven't done that. Well, shame on them for not doing it in advance, but that happens all the time. That's not the time to do that.
Correct. Yeah. Like somebody we're talking to on a Tuesday or a Wednesday, and they're like, yeah, we're going to get homes this weekend. We get them fully approved. So now if they like one of those homes, they're prepared, you know, and they just look that much stronger as a buyer. Like they have things in order, they're ready to go. And it's just all about the presentation, really.
Great. Love it.
I will tell you how buyers, I see this, I see it as a listing agent, and we see it as buyer agents. That loan pre-approval is so important. Buyers lose houses all the time because they do not have a pre-approval with a bank that has a reputation in the market where they're putting an offer in on. And I can't stress that enough to people out there. If you were looking to buy a home and you have gone to an online bank for a pre-approval, or you do banking with some bank out of state, if it's a bank that is an unknown entity to the listing agents in the area that you're looking to buy a home, you are going to be at a disadvantage. And it's so wonderful for us to be able to say as buyer agents to the listing agent, hey, here's our pre-approval, here's Jason's phone number, call him, he's available 24/7. He will let you know the how qualified these buyers are, and if you have any additional questions for him, he's happy to ask. He's happy to answer them. That is so important, because if I can't get in touch with a loan officer as a listing agent when I get a pre-approval, or if it's a bank that I am not familiar with, it just makes you nervous, right? There's no history. There's no proof that they're going to get the job done. And it really doesn't matter if they're putting 5% down or they're putting 30% down. Like you said, Jason, loan officers make mistakes. They're only human, right? So if you're dealing with somebody who's new or just doesn't have a track record that you are aware of, it's going to put those buyers in a disadvantage. So it really is very important.
When I call Jason and I say, our mutual client is going to make an offer on a property this weekend on Monday, I'm putting together the offer. I want to make an aggressive closing date of whatever, and we discuss it. Jason will always tell me, no problem, Bruce, I can deliver on that date. And when he says I can deliver on that date, I know he can deliver on that date. And that's not always the case with every loan officer. And that's the key to this, to your point, Diane. You know, the reputation, the honesty, all of that up front is very important when I'm trying to put an offer together for our clients. I want to know that we're both doing everything we can, Jason and I, to make sure that our clients are put in the best possible light. And if that needs to be aggressive, that's never been a problem so far.
Yeah. I want you to tell the story. Jason, if you could talk to us a little bit about conforming loan amounts. That's been a big buzz. There's been articles on it. I've had a few clients ask me that. It can be pretty significant in this area, in Norfolk County, Bristol County. Can you talk to us a little bit about that?
Yeah, so conforming loans are loans that are backed by the government-sponsored entities, Fannie Mae and Freddie Mac, and it's a source for programs where you can put less money down than non-conforming loans. So the amount is set as far as the cap for conforming loan limit each year. And up until now, for a county like Bristol County, it's been set at $548,250. And then every year in January, they increase it based on the home appreciation rate for that county. So what we've done at Guaranteed Rate is we know home prices are going up. So we're saying we're not going to wait till January 1st. We'll start accepting higher loan limits in areas like Bristol County, up to 625,000 now instead of the 548, because we know it's going to be going up and we're close enough to the end of the year that like we're comfortable doing that. So that increases the buying power. If you have 5% down and you're in Bristol County specifically, up until now, you've been capped at about 576 for a sales price as your buying power. Now that's going up to 657 right away, like today, with just 5% down. So that's a huge deal. It opens up a lot more homes that you can look at. Other areas like Norfolk County is considered a high cost area. So that's been a way higher limit already, up at 724,000 all year. There hasn't been any change to that yet, but we do expect that'll probably be up closer to 800,000 come January. So that change hasn't gone into impact yet, but soon it will be as well.
I remember distinctly having a conversation with a buyer on one of my listings in Easton. Easton happens to be Bristol County, which sometimes I forget. And oh, by the way, case in point of loan officers. Let me just tell a story. Okay.
Don't give us a bad name, Diane. Come on.
I'm not gonna name names. I had a very expensive listing in Easton on Old Stable Lane. And it was a listing, it was in not like a $900,000 listing. And the loan officer, an offer was put in, and my buyers wanted to accept the offer. Do you remember this, Bruce?
I do.
And they had to call me. Like we were literally about to accept the offer. And I spoke to the loan officer. It wasn't you. I spoke to the loan officer. I vetted out these buyers. Everything was great. I got a call like hours later, thankfully not long enough that the other buyers for the other offers did not go away. Okay. They were still hanging out. And he said, "I'm so sorry, Diane." The buyer actually called me. The buyer's agent called me. "My client has to pull out." What do you mean your client has to pull out? "Oh, well, we didn't realize the property's in Bristol County and there's a lower conforming loan limit than there is in Norfolk County." And that, this is industry information that only when you're experienced do you know these things and do you have to be aware of them and be careful of them, right? That is like, Jason, I feel like you know it off the top of your head, and you're not the only one. We're not here to sell you, Jason. Although, you're great at what you do. I know you are. You're here. Yeah, he's great. Use him. He's wonderful. But there's a lot of really great loan officers, but you have to know these limits and whatnot, because can you imagine? Oh wow, the house is in Easton. Oh whoops, I approved him on a house in Norfolk County. This Easton happens to be Bristol County.
And Easton is probably the most extreme case in Bristol,
right? Because it's a higher price community.
It's probably amongst the higher price communities. So when you have clients who look, because it's on the border of Norfolk, they're looking in Easton and Canton and Sharon and Foxborough together, and it puts them in a position where I can afford this in these towns, I can afford in that town. Mansfield's another one, I think, is that Bristol as well?
It is, yeah.
Yeah.
That's another one.
Mansfield and Easton, because they border Norfolk County, put them in a different position.
Do you know who was more upset than me as the listing agent? The buyer.
The buyer, yeah.
The buyer. He had no idea. He's like, "Oh my God, I got the house." And then it was like, "Oh, whoops, you can't afford the house."
You know, and that's probably I guarantee the loan officer was probably from out of state. They see like Easton, they think it's close to Boston. They're like, oh, no problem. But it makes a difference what county you're in. It's all done by county. So,
Right.
Sure, for sure. So that was, we were talking about, here's a slide that talks about that buying power. And I believe, Jason, you just went over this, didn't you?
yeah, that's what we were just touching base on. So, like with any conforming loan there, you can put down as little as 5%, or if you're looking to do a refinance, you can do an 80% loan taking cash out. So, if your home's gone up in value and you want some cash, get access to some of that equity, you can borrow right up to 80% of the current value on it. So,
That's fantastic.
you know, it's opening up all those options at higher price points.
That's fantastic. That's fantastic. Our next slide talks about the cost of waiting. You know, even though prices are where they are today, we live in New England and we're not seeing prices dip, right? They're just, if anything, what we are seeing in our market here is the frenzy that happened back in February and March, where we were getting, 10 offers on properties. It's kind of reset, Jason. It's kind of reset. You know, that house that used to be 550 is now 650 all day long. And and they're appraising at that number.
Mm-hmm.
Let's talk about that too for a minute. Let me just click off this slide for a minute. Are you seeing appraisal issues now?
And there's always some appraisal issues in any market because, you know, sometimes homes aren't priced correctly based on what other homes have been selling for. But in general, we don't see too many of them. No.
Yeah.
You know, if there's other sales that are close to what this home's selling for, then there's data to support it. And you know, the market's increasing. There's a lot of transactions happening right now. So usually there's data to support it. If you're buying a home that's the highest priced home the town has ever had, then it's probably not going to appraise because there's no data yet on the records to support it. So it does happen from time to time, but in general, it's not like an overwhelming issue.
Yeah, we talked about that on one of our previous episodes, which was, the appraisal gap, and just finding our clients' buyers to make sure that if it is one of those sales that's incredibly over asking price, we need to make sure we pick the right buyer for our seller who can cover any kind of gap that would happen.
We're doing a lot of that too. Just, working with the clients that are making offers, because to be aggressive, like you're saying, they have to offer appraisal gaps or waive the appraisal completely. So we really have to go over the numbers with them so they know what that means. And if they're in a position where they'd have to come up with extra cash or not, if they're already making a strong down payment, there's a lot of built-in cushion already where the appraisal could come in lower and there really could potentially be no impact at all on their loan. So it's just taking the time to go over that with them so they can make the most aggressive offer and also know what the risks are, the different possible outcomes on the appraisal. So it's all, taking the time to do that so we can, we kind of try to act like a coach of like, here's some tools you can use to get your offer accepted, and then give you and Bruce those tools to go to battle for them.
Totally. Let me ask you a question. I have this question, which is on the appraisal gap. Is it dollar for dollar, Jason?
No, because it's always, unless it's a case where it's like a VA loan where they're borrowing 100% of the price,
right?
And it is a dollar for dollar, but in every other case, they're borrowing a percentage of the home price anyways. So it's not always an exact dollar for dollar.
Right.
So if it comes in like 10 grand lower, maybe they need to come up with an extra 8 grand.
Exactly.
They're doing like 20% down.
Right. That's something that you're
I can rattle those numbers.
You're very good with, you're much quicker with numbers than I am sometimes. So I love that. Sometimes I have to ask you to slow down, because dumb it down for me, slow it down so I can understand this. So let's talk about the cost of waiting, and because I think that I think that, listen, we're still, it's so funny, buyers today are so spoiled, right? I mean, we were refinancing at 8%, 10%. And, I don't like to start talking about, the good old days, right? But, oh my God, it's going up to 4%. This is awful. Like, I mean, think about it. It's 4%. The sales tax is more.
Right. Yeah. And that's a fixed rate. You can have that loan for 30 years. Like that's a long
It's
time.
just really, it's just incredible. So talk to us about what this slide shows and comment on what how to purchase buyers purchasing power.
Yeah, so like the kind of the highlights on here are perfect because you can see if you're borrowing 400,000 and you're taking out a 2.75 rate, you're looking at right around 1,633 a month for your principal and interest. And then kind of a drastic change, but if rates were to go up to 4%, which really isn't out of the question, that could still happen next year.
Yes.
That same $1,600 payment, instead of being able to borrow 400,000, now you can see where that arrow is, you're borrowing 340,000. So you just lost a lot of purchasing power for that same monthly payment just because the market shifted for rates, which can happen quickly. And I feel like as the economy comes back to life, and hopefully 2022 is even better than 21 has been for the economy, rates could potentially shoot up fast, especially if inflation is picking up quickly. It probably will happen. So it kind of shows you right now with the rates right around 3.0 still, it's a great time to grab a great rate and lock that in for 30 years. It has a big impact on what you can afford.
Let's talk investment properties. I have a lot of clients who they have had their primary residence for a while, and they are considering they would like to take advantage of the low interest rates and buy investment property. And, they probably don't want to buy a, medical office building, but maybe a duplex, maybe a single family, maybe even a fourplex. Talk to us about what can you buy with you as a lender that isn't commercial, it remains a residential or in your purview, what you can loan on, and how do the requirements differ?
Yeah, so we focus only on residential lending, which is anything that's 4 units or less. So non-commercial property, so not a store, a restaurant. So if it's 4-unit building and it's all residential, that's something we can handle. And once you get up to 5 units, that's considered commercial, completely different type of loan that we don't handle. But if you're in that 1 to 4 unit category, we can help. The biggest difference is the down payment requirements. Rates are a little higher than they are on a conforming loan, but the biggest difference is down payments. So as we were talking about earlier, you can put 3-5% down on a lot of primary residence homes. When you get to a rental property, if it's a multifamily home, the minimum for any program is 25% down. So that's a big difference. And that's the thing that usually stops most people is they don't have that much cash ready to use. So multifamilies, you need 25%. If you're buying a single family or a condo that you want to rent out and not live in, it's 15%. So less, but still more than if it was your primary home. The good thing though, is that the rental income that you're going to be earning from owning that home can be counted as qualifying income to help you get the mortgage. So that's a big help in getting people approved for these types of loans. And really the biggest thing is having the cash on hand for the down payment.
Would you entertain if I had a client who is looking and they say, we want to buy an investment property? Is that something they could call you and just kind of talk it over? What that might look like? Maybe you don't pull their credit, but just have that conversation.
Oh yeah, definitely. Yeah, because a lot of people call me up. They're like, I want to buy a rental home, and they have 5% to put down. They just don't know, So we coach them up on what the requirements are, so they can put a plan together to get to where they need to be. Maybe they're not ready in a month, but maybe next year they'll be ready, or the year after. But it's just having that information. Otherwise, you don't really know what you're doing. You can Google forever and probably get 20 different answers on what you need to do. But just give us a call and we'll put you on the right path.
What about a second home, a vacation home, a beach house?
So those are better because you're getting the same rates as you would get as a primary residence because you're using it for your personal use. You can still rent it out some as well.
And what does personal use mean? Is it is the assumption
Number of weeks?
A week out of the year or 6 months?
So as long as the guidelines are kind of vague, they say as long as you use it for yourself at least a portion of the year. So you can use it a couple of weeks and put it on Airbnb the rest of the year, and as long as you're not renting it out full time, then it's still considered a vacation home. And the biggest difference there is you need at least 10% down for a vacation home. And other than that, we've done more rental properties and vacation homes this year than we've ever done before. Like, it's going crazy. I'm licensed in Vermont, New Hampshire, Maine, and it's like really intense. Those markets are hot as well. Lots of people are trying to get away and have their own places. So we've been doing a ton of those loans as well.
Rhode Island?
Rhode Island, I'm in as well. Yep. All New England. Yep. Florida as well. We've been doing a lot of vacation homes down in Florida.
Now you're talking.
So we got some good coverage there.
Right. Who's Adam? Is Adam your colleague?
I don't know. He's kind of
Is Adam
annoying.
on your team?
He's like spamming us here.
Nope, he's not spamming. Here he is. He just
Yeah,
reminded
Adam's on my team.
me
Yeah.
any rental income to qualify for a second home. What does
Right.
he mean
Look
by
at
that? Obviously, it's not obvious to me.
Some
What does
good
that?
comments coming out of the bleachers here.
What does that mean? You can't use.
So, like, if you're buying, so I was mentioning how if you're buying a rental property, rental income you'll be earning can help you to qualify for your debt ratios with underwriting. If you're buying a vacation home, even if you're going to rent it out some, there's no rental income that gets factored in with underwriting.
Got it. All right. Any other tips you want to give to buyers, people looking to buy, people upsizing? Any advice let's talk about people who may not have let's talk credit scores. And are you seeing a lot of people that have to delay because they have to improve their credit or dings on their credit? Or what's some advice you want to give to buyers tonight, Jason?
Yeah, I'd say the biggest thing is like reach out to somebody that's local and trusted, referred to you, and start the process of getting pre-approved. Because think of it like information collecting. Like you're seeing where you're at now, and if you're strong enough to be where the price point you want to be at to get a home, or maybe you have some stuff on your credit you can fix, or you didn't know how much you needed for a down payment. We haven't even talked about things like closing costs and what that looks like. Like you just need that information, and the best way to do it is to contact an expert that does it every day and get the info so you can plan accordingly. Because if you're just like casually looking at homes and you have no clue about any of your numbers, you're going to fall in love with a home you like, and you might find out you can't buy it because you had something on your credit from 5 years ago that you had no clue about. So just reach out to someone, get that pre-approval done, get informed and be ready, because you never know when that dream home is going to come on the market, and you want to be ready for it.
A very good point.
I want to throw something out there, Bruce. Sorry. You want to go?
Yeah, let me ask a quick question. So I deal with a lot of buyers. I've helped them purchase homes over the last, 3, 4, 5 years. Is there a time period that they need to wait before they can refinance with rates kind of lower than they might have been at some other point?
Yeah, so it's usually about 6 months after you buy your home, you'd be eligible to refinance at that point. And we've actually been helping some people refinance right now that bought a home earlier this year because they're already able to save a couple $100.
Are there closing costs involved with that, Jason, again?
We usually offer no cost refinances, or if you are paying costs, it's a lot less than when you first bought the home.
All right. So everybody that's listening, check your rate. What's the rate today, Jason?
As of today, most people were qualifying like right around 3 1/8 or 3.0 for a 30-year fixed.
All right. So there you have it.
15-year fixes are still under 2.5 if you're looking for a 15-year.
This is to all our clients, to all our friends. If you own a home and you have a rate over, what makes it worthwhile?
I'd say if you're at 3.5 or higher, which a lot of people still are, it's definitely worth looking into.
All right. So if you're at 3.5% or higher, call Jason.
Yeah, I mean, it's perfect if you can, if you get your most recent mortgage statement. That's going to have a lot of info we need. We can do like a cost analysis, show you what you're paying now compared to what you could be paying. And if it's not worth it, we'll tell you. We don't want you to waste your time either. But a lot of people are able to save a good amount right now.
That's great.
So now I'll go to my question, which was, my value of my home has gone up tremendously. I have a lot of equity. I would argue that most people in this area have more equity, and nationwide, there's more equity in homes now. I forget the statistic, but it's out there. Have more equity in their homes now than they ever had throughout history. Like there's more equity that people are holding in their homes. I have a lot of equity in my house. I want to pull out some equity and I want to buy another property. Can I do that?
Yeah, you can do that.
All right.
Putting your equity to work for you. Yeah.
Put your money to work for you, everybody. If you have equity in your home and you are done, maybe you want to save it if you're paying for college and you want that cushion. But I would tell you that if you have a lot of equity in your home and you can buy a second home with 10% down or an investment property with 25% down, there is no reason you can't pull out equity in your home and use that to become an investor.
Right.
Right?
Yeah, a lot of people are doing that right now. We're helping them get the cash and then buy their next home right away.
It's awesome. It's awesome. Well, thank you so much. If anyone has any less, we had some comments here. I think we ended up answering most of the questions that came in while we were on. Jason, we put up a slide here of Jason's contact information, everyone. Give him a shout. He's super responsive, knowledgeable, easy to talk to. And he knows his stuff. So we trust him with our clients, and we trust him with all of you watching. So for sure, jot this down. This will be recorded, and you can reach out to Jason. Bruce, do you have any final questions?
No, the only comment I have as I started is I have been very, very fortunate to work with Jason. We've had dozens of clients that we've shared in common. He and his team have been fantastic. As I say in every introduction, I'm very, very fortunate that I have someone on my team, in more ways than one, on my team that I can rely on. And it's been a very nice relationship. I appreciate it. Yeah,
you guys have been awesome to work with. So looking forward to helping some more buyers win some houses here. Let's go.
All right, everyone. Well, that's a wrap for tonight. I thank everyone for watching. And again, if you have any questions, reach out to me or Bruce or Jason on the mortgage front, and we'll see you next week.
All right. Thanks, guys.
Bye, everyone.
Thank you.